All right, let's take a few minutes to cover subprime lending and risk management practices. The Office of the Comptroller of the Currency, the Board of Governors of the Federal Reserve System, the Federal Deposit Insurance Corporation, the Office of Thrift Supervision, and the National Credit Union Administration collectively make up and are referred to hereon as the agencies. The agencies issued a final interagency statement on subprime mortgage lending that was developed to clarify how institutions can offer certain adjustable rate mortgage products in a safe and sound manner and in a way that clearly discloses the risk that borrowers may assume. The agencies also developed guidance on subprime mortgage lending to address emerging issues and questions relating to certain subprime mortgage lending practices. The guidance was directed towards borrowers who may not fully understand the risks and consequences of obtaining products that can cause payment shock. In particular, the agencies were concerned with certain adjustable rate mortgage products typically offered to subprime borrowers that have one or more of the following characteristics. 1. Low initial payments based on a fixed introductory rate that expires after a short period and then adjusts to a variable index rate plus a margin for the remaining term of the loan. 2. Very high or no limits on how much the payment amount or the interest rate may increase on reset dates. 3. Limited or no documentation of borrower's income. 4. Product features likely to result in frequent refinancing to maintain an affordable monthly payment. And 5. Substantial prepayment penalties or prepayment penalties that extend beyond the initial fixed interest rate period. Products with one or more of these features present substantial risks to both consumers and lenders. These risks are increased if borrowers are not adequately informed of the product features and risks, including their responsibility for paying real estate taxes and insurance, which may be separate from their monthly mortgage payments. The consequences to borrowers could include the following: being unable to afford the monthly payments after the initial rate adjustment because of payment shock. 2. Experiencing difficulty in paying real estate taxes and insurance that were not escrowed. 3. Incurring expensive refinancing fees, frequently due to closing costs and prepayment penalties, especially if the prepayment penalty period extends beyond the rate adjustment date. And finally, the worst, losing their home. Consequences to lenders include the following: unwarranted levels of credit, as well as legal, compliance, reputation, and liquidity risks due to the elevated risk inherent with these products. Also, lenders will be responsible to maintain additional capital reserves to guard against losses on riskier loans. This requirement also hampers the lender's ability to make loans because he or she must maintain a certain ration of risk-first capital reserves when making loans. We want to be clear that subprime lending is not synonymous with predatory lending, and loans with the features described above are not necessarily predatory in nature. However, institutions should ensure that they do not engage in the types of predatory lending practices. Typically, predatory lending involves at least one of the following elements. 1. Making loans predominantly on the foreclosure or liquidation value of a borrower's collateral, rather than on the borrower's ability to repay the mortgage according to its terms. 2. Inducing a borrower to repeatedly refinance a loan in order to charge high points and fees each time the loan is refinanced. This is also known as loan flipping. Or 3. Engaging in fraud or deception to conceal the true nature of the mortgage loan obligation or ancillary products from an unsuspecting or unsophisticated borrower. Institutions offering mortgage loans such as these face an elevated risk that its conduct will violate Section 5 of the Federal Trade Commission Act, which prohibits unfair or deceptive acts or practices.